Hello, today we have Henry McPhee, the CEO of Streamex, and it's a great day for Henry because of the product that he's offering. GLDY is a gold-backed real-world asset, and as far as I know, today is the all-time high of gold. Is that correct?
It is. It is. It's pretty crazy.
So this is a great day for you to be recording the conversation because you're basically trying to sell an asset where every single person that has ever bought it is up. That's an incredibly good pitch.
Yeah, no, it's not bad. It's been a good year.
Okay, tell me a little bit more about this GLDY asset that you guys are working on.
100%. So GLDY is sort of the inaugural asset from Streamex, and it is a gold-backed stablecoin with yield. And so essentially, if you think about it right now, gold traditionally costs you money to hold, whether it's through an ETF where you're paying, 30 or 40 basis points, or, holding physical gold where it costs you the storage costs. Now with GLDY, we're giving the ability for investors to get gold price exposure with an up to 4% yield on top of that paid in additional gold. And that's all enabled sort of through tokenization and then the technology that we've developed. And so it's something we're super excited about, excited to sort of get into it with you. But yeah, I think it's a very interesting and sort of revolutionary asset for the industry.
Okay, I want to jump into where the yield comes from because as we've learned from all the experiments in crypto, knowing where the yield comes from is super, super important. But before that, I want to kind of dig into your background a little bit. So you are, as far as I can tell, a mining engineer, and yet you ended up in this real-world tokenization world. Tell me a bit about your background. How did you end up here?
Yeah, no, 100%. Yeah, so I am a mining engineer. But the funny thing is I've been doing crypto and blockchain work for longer than I've been doing mining engineering. And so, I went to school for mining engineering. I got my degree from McGill University in Montreal, Canada. But, during that whole time, when I was 19 years old, launched an NFT project with some friends at McGill. That project ended up becoming, I think on our launch, we were the third largest project in the world. And so that was a lot more successful than I thought it was going to be. Ran that for a couple of years. From there, started a software development company. And so we were doing primarily blockchain software development for early stage tokenization. And so, everything from art to sort of the early stuff with protocols and all that sort of stuff. And we worked with a number of really cool projects there. And then founded Streamex now just over 3 years ago with my co-founder Morgan Leckstrom. And so he was a mining executive. I was working in Vancouver, and we met, and then founded Streamex, and now we went public almost 7 months ago now. So it's been a crazy journey.
It's been a crazy year, yeah. Okay, so if I had to explain to if you had to explain to my mom what real world asset tokenization is, how would you explain it?
So I think I get this question a lot, and I think it's a pretty simple answer. The way that I sort of explain it is, when you buy stock in a company, like a share in a company, you have an ownership percentage of that company. Tokenization and real world assets are essentially the same thing, just for whatever asset is tokenized. And so with gold, for example, if you buy, say one GLDY, like our gold asset, or another tokenized gold token, you are buying 1 ounce of gold. And so the token itself is simply just a digital representation that allows that asset to be transferred, traded much easier than the physical, obviously. And so, I think that's sort of a good comparison, and I think people sort of understand it pretty well. But at the end of the day, it's a receipt, and so a digital representation of the asset itself.
Okay, all right. So in the case of gold, you have a token that represents gold, and somewhere in the bank vault, somewhere there is the equivalent amount of gold. Is that correct?
Yeah. So for most gold tokens, that is correct. With our gold token, and you asked this question earlier, where does the yield come from? We, instead of just taking that gold and sitting in a bank vault, we make that gold active. And so the yield itself, it comes through that activity of leasing and stuff like that. And so we can get into that, but yeah, that's a good way to think about it.
Okay, so tell me about what you guys do with the gold. How do you make it active?
Yeah, 100%. So our gold, we have a partner called Monetary Metals, and so they are the by far the largest gold leasing company in the world. And so what they do is, instead of the gold sitting in a vault and us paying money to store it in that vault and it doesn't do anything, we make it active. And so what we do is we lease the gold to people who use it as working capital and companies that use it as working capital. And so a jeweler, a refiner, people like that. And so essentially how it works is those companies need gold to be able to create the jewelry or refine the gold, sell it as a refiner, and in return they pay us money to be able to use the gold that they lease from us. And so for them, what it provides is instead of them having to go to a bank and borrow money, which is most likely in US dollars, not in ounces, we lease to them in ounces of bullion and they repay us in ounces of bullion. And so how it works is instead of, like I said, the gold sitting there in a vault, they have the ability to use it. We keep title to the gold throughout the whole process, and then they pay us back in additional ounces of gold at the end. And so that allows us to keep the gold and still have it in our possession, but they have the ability to use it, and we have the ability to pass that yield on to the holders themselves.
Is that how this is generally used then? Do people pay interest in gold? Or, when a gold jeweler wants to borrow gold to make jewelry, do they pay interest in gold or do you generally just pay interest in dollars? How does it generally work?
Yeah, so traditionally, what they would do if they're not, leasing through Monetary Metals or another provider like that, they would borrow from a bank. And so the bank does not operate in ounces; they operate in dollars. And
Of
so the
course.
bank, what they would do is say they need to borrow $100 million to buy gold and create it into jewelry. The jeweler would borrow that $100 million in USD from the bank. Then they would go buy gold with that and make their jewelry. What happens though, and we actually saw this year, is when gold price went up 100%, from 2000 to 4000, you think about units. And so for the jeweler, what they care about is how many ounces of gold that they get. When all of a sudden the price doubles, they have half the amount of units that they expected on that $100 million line. And so they end up getting into trouble. And so in our model, because we're able to lend in ounces and get repaid in ounces, it works a lot better for them because they're not as exposed to price change of gold, and it actually solves a lot of problems.
Okay, so you mentioned that you lend it to them in bullion. So I'm imagining like you're giving a jeweler a gold bar and he'll give you a gold bar and a half back at some point in time. Is that roughly
Yeah,
what it is?
yeah, yeah. Perfect,
Okay.
perfect way to think.
And you mentioned that it's not just people that, not just jewelers who obviously make jewelry, but also refiners or some of the people that will borrow against this. What do they need it for?
So refiners themselves, they're the ones who essentially they work with a lot of the mines and they bring in the doré, they refine it down to the 99.999% pure. And so there's a lot of gold running through them at all times. And so sometimes they need to be able to borrow gold to be able to keep up with demand. And so unlike jewelers that are turning it into jewelry, they simply need gold for the demand that they're getting. And so
Got it.
as a working capital requirement, essentially a pass through for them, they have the ability to lease.
Okay, so I'm a refiner. I know that I'm currently refining a ton of gold, and then someone comes and wants it now. Well, I can borrow it from you, sell it to them, and then that way they. Okay, I got it.
Exactly.
Okay, so obviously there's quite a few gold-backed real-world assets in crypto. There's Tether Gold. There's Paxos Gold. Is the fact that you pay yield your USP? Is that the main differentiator?
Yeah, I think there's sort of two main differentiators that we look at. So one, the yield piece is obviously very powerful. There isn't any other gold stablecoins on the market that pay a yield in gold in an institutional sense that we do. And so with that, that's obviously a big advantage for people because now all of a sudden gold is no longer the pet rock that sort of sits there. You actually have an interest component to it. The second piece is the way that the asset is designed. It is a security, and so the asset is a security, and we designed it specifically so that it can be held by U.S. based ETFs, asset managers, and distributed through retail brokers. And so this is something when we look at the ETF market, especially on our first, we announced $100 million raise into GLDY, which is sort of the first initial pre-sale. The majority of the orders in that raise right now are actually coming from ETFs. And so what we've seen is because this asset gives them the ability to get gold plus the yield on top of it, all of a sudden they have a better product than the ETFs that are out there right now. And so GLD is the largest ETF. It essentially costs you 40 basis points. You're getting gold price minus 40 basis points. If you have an asset that gives you gold price plus up to 400 basis points, it's all of a sudden a much better asset for people to own. And so because we designed the token so that it can be held by these ETFs and in sort of traditional finance, I think it provides us a pretty big edge and a much wider distribution. There's around $560 billion in gold ETFs right now, the last time I looked. And so if you think about that for a market TAM with a much better asset, it provides us a lot of sort of growth potential for this specifically.
And why isn't every single gold ETF doing this? What are the credit risks here that people should be aware of?
Yeah, so I think there's a couple things when you look at it from the ETF standpoint. One, the market has been okay paying gold price minus 30 or 40 basis points forever now, since these ETFs have existed. And so with that, there's been no real reason for them to look at something like this. So I think us coming in is going to be quite a thought for them when they actually see it happen. The second part is the gold leasing market and mechanism there. Tokenization is what allows us to securitize that process. Before tokenization exists, to be able to securitize that, one would be extremely hard, and it would it would be a lot of paperwork, a lot of lawyers going back and forth, and I think it wouldn't make a lot of sense because it wouldn't be a very liquid asset. By us being able to tokenize it and turn it into a liquid asset, it provides a ton more sort of growth potential as well as sort of interoperability for the asset itself. And so I think when we look at it from both our partnership standpoint with Monetary Metals and being able to really institutionalize and securitize that, and then also do that through tokenization, it provides us a sort of unique stepping point to get off of. And I think tokenization itself right now is a very hot topic, but we've been at this for 3 years since sort of tokenization was sort of just getting going, and we've built ourselves a really strong moat to be able to come out into the market with this.
And you guys, you guys mentioned that you went public last year. The product is set to launch soon, but you've been working on this for 3 years. What has changed in the regulatory environment that has made it possible to launch products like this, which have just not been available until now?
Yeah, no, good question. And I think something that has changed, especially in the last year, is the sort of regulatory environment for tokenized assets and stable coins and everything like that. And we've seen that especially in the US with their sort of pro crypto push. And so I think that is one thing that is, really sort of driving this forward. I think the other thing is, for us, like I said, we've been working on this for 3 years to be able to put all the technology and legal infrastructure in place for an asset like this, as well as the other assets that we start to launch. Because now that we're going to launch GLDY, all of the plumbing is sort of in place. The next thing will be silver and assets like that. It's not an easy process, and so we made sure that we took our time. We made sure that we had all of the necessary infrastructure in place to be able to do this. And then when you couple that with the regulatory landscape really shifting and people knowing about tokenization and being open to working in that space and industry now, it provides a pretty good tailwind for us to be able to operate.
Okay, so you mentioned that on your road back you have other precious metals. Are you guys thinking about branching out from precious metals at this point, or is the precious metals opportunity pretty big as well? Are you satisfied with that?
So I think obviously the gold and silver markets are massive, and I think those are two TAMs that we can be quite successful in. I think as we look at it, and we announced our roadmap a couple of weeks ago on an update call. And so what we're looking at really is any sort of commodity asset that has a working capital requirement. And so the reason that we look at that is because that allows us to create yield-bearing assets on top of them. And so with gold, with silver, there's robust markets for leasing. We're also looking at copper and oil and gas. Those probably won't be until 27, 28 because there's quite a bit more infrastructure, especially on the leasing side, that needs to be developed by us. But right now, silver and gold are sort of the two main focuses. And I think as we sort of get into the market with these, we're going to be in a pretty good spot. There's a lot of room to grow in those markets specifically.
Okay, let's go back to GLDY. Do you have a date for when it's launching?
So we haven't announced a formal date. We announced Q1 in our update call. I would say it's most likely a matter of weeks, not a matter of months in terms of launch. We're feeling very comfortable about it, and we're excited to be able to get it out.
And where are you seeing demand coming from? You mentioned that ETFs are one source of potential demand. Obviously, I looked at the investor requirements. You have to be an accredited investor. There's certain minimums you have to reach. What sort of interest have you raised so far?
So we announced the $100 million raise. We also announced that the sort of initial indications that we've gotten, and those are getting pretty far down the line now, exceed that $100 million. And so it's been a very positive response from the market. The biggest interest that we've gotten is from sort of three avenues. One is from the ETFs, which I would say probably are the largest interest right now. And so ETFs who actually want to hold GLDY either as a percentage of some of their funds or even potentially a 100% weighted ETF.
What sort of ETFs? What sort of ETFs are these? Are these like I'm imagining gold ETFs, but actually, now that I think about it, they probably don't have the mandate to hold GLDY. So, what sort of ETFs are these?
Yeah, so it's primarily one either like a mixed bag, mixed based commodity ETFs. And so what we've seen actually is a lot of ETFs that hold for futures and options within their portfolio. They are looking at switching those into GLDY because what it gives them is one, the upside exposure to the gold price and then the yield on top of it. And it essentially gets rid of any carry cost or contango that they have with those futures and options contracts. And so that's one big sort of component of those funds that we've seen very interested. And then also, sort of yield focused ETFs as well. Like essentially, if an ETF has a yield mandate, they are very interested in this asset itself. And then, with that as well, we have a partner press released and announced called Simplify Asset Management. And so they're a great partner for us. And then from there, I think it's a sort of a wide range on potential for 100% weighted GLDY ETF as well.
Okay, so ETFs are one source. What are the other two?
So the other two would be one, commodity traders, and commodity hedge funds. They've shown pretty significant interest, and then also the last would be essentially distribution through retail brokerage networks. And so high net worth accredited individuals who want to own the asset, they might have a position in GLD or another sort of gold focused asset, and they want to be able to get yield on top of that. And so that'll be sort of the third distribution channel and interest that we're sort of seeing as well.
Okay. And how does how big is the gold leasing market? Can you guys grow to multiples of $100 billion? Like, how much demand is there actually for credit in gold to be repaid with gold interest?
Yeah, no, so that's a good question. And so first, what I'll say is, we've had confirmation from Monetary Metals, our partner, that within 3 months we can easily get $1 billion worth of gold on lease with no problem. From there, the market itself, if you think about jewelry alone, jewelry is around 15 to 20% of the total gold market. The gold market itself right now, total above ground gold is around 32 trillion. And so for us, capacity is really not an issue, and I think actually with gold price going up, what we've seen is a lot more demand for leasing. So with that, if we want to put a cap on it, it really doesn't exist. And I think we have, more than enough capacity to be able to facilitate, getting to a $10 billion fund, 20, $30 billion, asset. There would be no issues there.
So prior to you guys coming onto the scene, what was Monetary Metals doing? Were they just custodying a tremendous amount of gold and lending it out to these various players?
Yeah, so traditionally Monetary Metals, that's what they did. They had individuals who came to them, gave them gold, they would lease it out, they would get the yield. I think something important to note is now that we've sort of tokenized and securitized this process, it makes it a lot easier both for us to get gold on lease with Monetary Metals as well as Monetary Metals to be able to grow the amount of gold that they have available to put on lease. If you think about it, with Monetary Metals right now, they've created an amazing business by being able to do this. But there's some caveats that come with it because you need to put your gold on lease, it's locked up for 12 months, and you don't have access to it. Now with this, token, you have the ability to get the yield from leasing, not have to worry about, having review leases. We handle all that. All the sort of like friction points, we've taken them all out, and you have a liquid asset that is available to be sold. And so instead of having to, go through all those friction points, tokenization really gets rid of all of them and gives us the ability to create this liquid asset that people can move in and out of, they can invest in, they can hold, they can, it feels like a security.
And what does the credit do? I mean, one of the risks, of course, is that as the market expands, the credit profile of the people borrowing the gold becomes potentially a lot less good than it was at the beginning. How are you guys thinking about credit risk? Both as Streamex, both as Monetary Metals, but also on behalf of the token holders. What happens if there's a loss? Does everyone take a haircut? How is the whole thing structured?
Yeah, no, so that's a really good question. And the most important point is one, there's no credit component to these leases. They are operating leases, and so there's no credit underwriting. It's an operating lease itself. The second point is the leases themselves are all fully insured. And so there's something called jeweler's block insurance that all the jewelers hold, and then there's also an umbrella policy from major providers. And so if I told you the names, they would be names that you knew. And then from there as well, everything is also RFID tagged. And so all of the gold that is on lease is fully RFID tagged. We have the ability to go and do spot checks. We have the ability to see where the gold is at any given time. Our fund admin calculates daily NAV. Our auditor will give monthly attestations to the gold, where it is, the amount, all of that stuff too. And so the whole process is very institutionalized, and it's something that was important for us when we were going through our due diligence to make sure that this was a safe asset.
Right. So have there been no cases of gold jewelers or someone else going bankrupt and then lenders taking a loss? Has that never happened?
So Monetary Metals has never had a default on any of their leases. We also have something called a passing lease criteria. And so we review every single lease that comes in. And when we put gold on lease, and there's, certain requirements that they need to pass to be able to make sure that we can put it on lease. I would say the jewelry manufacturers and refiners and stuff that are actually in contract with Monetary Metals and getting leases, they are very large companies. And so,
right.
They're press released with a company called Calion, which is publicly traded, hundreds of millions of dollars, has 3,000 stores. Also a refiner called AGA Refining, which is one of the largest refiners in Europe. It's these are very large players, and so yeah, that's something that's very important for us too.
And I guess on the credit stack, you guys have complete preference because they must have you're probably lending against some sort of inventory that they already have. So if something happens, then you can go in and take the gold because it's already yours. You don't have to work for bankruptcy proceedings and all that.
Yeah, exactly. Everything's 110% over collateralized as well for them to be able to accept the lease.
Got it. So you guys have been working on this for 3 years. It's finally looks like it's coming into fruition in a couple of weeks. What are some of the lessons that you've learned from trying to build a product like this?
That's a good question. I think, when we sort of look back at it, and I think this is with starting any sort of company, like there's a ton of ideas that you have in the beginning, and you want to create something massive and do everything. And when we were starting, we were like that. We're like, hey, we're going to create a full exchange. It's going to be Coinbase for real world assets and all that sort of stuff. And I think that's still on the roadmap. But for us, it was really important for us to be able to sort of nail down and focus on one thing to start and do that one thing very well. And that ended up being this GLDY asset. And so, from there, it allows us to create what we realize. It creates all the infrastructure for us to build on that and create additional things like the silver, copper, oil, gas. And without having to worry about taking on the whole world to start. And so I think when we started, there's a lot of big ideas, like I said, and now that we have a very clear path on, hey, this is our roadmap, this is what we're doing first, this is how we're going to grow off of this is the economics that we see on one asset, this is the economics that we see on two. It allows us to be much more methodical in sort of how we think about it. And I think for any startup founder, you always have big ideas for what you want to be. But I think by being able to really narrow down and focus on one thing, it provided us with a lot of, actually a lot more room for growth than it would be if we were sort of trying to do everything at once.
No, of course, that makes total sense. And over these 3 years, what else has, you've learned about focus. What have you learned about the markets themselves and how they develop? I mean, I think back to 3 years ago, 2023, crypto markets looked very, very different to how they look right now. Have there been any lessons in how the space is maturing?
Yeah, and I think as someone who's been in crypto for quite a while now, you see the ups and downs. I think if you were in the market, you would remember 2021, how brutal that was. Everyone thinks
Yeah,
everything was going to zero,
yeah,
and we ended up having our head down throughout that whole process. We're like, okay, hey, like this isn't going anywhere. Organization we think is going to be a massive thing as we sort of go into this sort of new age of finance. We see all of the biggest people in the world talking about it with BlackRock, the large banks, especially in the US. And so I think for us, we know that we had a good idea and a good product, and all of the other sort of noise, whether it's the markets going up or going down, we're in an industry that is, I think, truly going to revolutionize sort of the finance space, and blockchain itself, not just crypto, but the actual technology provides those rails for us to be able to do that. And so, even as a public company, the markets, they move every day. But you know that when you have a product that is going to be, I think, very, very large and successful, and it's exciting and it's new, we're excited to be able to bring that out to the market. And so by being able to put your head down and work on it, I think we ended up in a good spot.
As of right now, of course, if I want to get GLDY tokens, I have to be an accredited investor and I have to make a certain minimum commitment, which is in the hundreds of thousands of dollars. Is GLDY going to be available for secondary trading as well, or is it just going to be, as of right now, for accredited investors only?
Yeah, no. So GLDY will be available for secondary trading. There will be a secondary market for the asset, or actually, we should be announcing our ATS partner on that secondary asset quite shortly here. And
Hmm.
so with that, there will essentially be the ability for people to participate in the secondary. They'll have to go through, KYC, AML, all the sort of general requirements for a security. But there will be a secondary market for the asset.
Got it. Wait, so what's an ATS partner? Sorry.
So ATS it's an alternative trading system. It's
Got it.
essentially it's a securities exchange for digital assets.
Was there a temptation to just tokenize it as an ERC20 and just let it go on Uniswap, or was that just not going to fly with with the regulatory environment?
I think for us, because we especially wanted it to be able to be held by ETFs, and you're looking much more at those more institutional and TradFi channels too. That was never really a thought.
An
Maybe in
option.
my brain, I was like, oh, I'd love to be able to just, put this out on a DEX and, seed some liquidity and, let it run. But, I don't think our lawyers would be too happy if we did that.
Yeah, yeah, they probably wouldn't. Okay, Henry, any parting thoughts? Why should people buy GLDY?
I think everything that we discussed. The ability for you to get gold price exposure plus the yield on top of it. All of a sudden gives you very interesting returns. If you're thinking you're looking at the gold price return sort of historically is around 8%. All of a sudden you add 3 or 4% on top of that, you're getting S&P level returns with a historically uncorrelated asset. And so I think that's something that, it's very interesting for people's portfolios. And I think if you want gold price exposure, GLDY is the best asset for you to do that with. And then I think, as the GLDY is just one asset that we're going to create. And so when you think of StreamX as the company, we are the asset manager, we are the technology provider to be able to create all of this. And so, you can also look at the stock. And so, you can participate in GLDY, you can look at StreamX, the company too. And I think, it's an exciting story. We're an exciting market. And, it's going to be a really good 26, I think.
And how will you, like, let's say it's the end of 2026, how will you know if it has been a successful year?
So our goal is by the end of 26 to have $1 billion in GLDY. in that fund also to be able to launch our silver with yield asset too. And so, I think if we hit those two boxes, we're going to be in a good spot. Obviously, we have more sort of internal KPIs, but I think those are sort of the two biggest things that we're looking at.
Yeah, I mean, I wish you guys all the best. You have the best possible market environment for it. So I think, yeah, you're off to a very, very good start in 2026. Henry, thank you very much for your time.
Amazing. Thank you very much.